When it comes to investing our money in stocks, it is crucial that we invest in a company which operates in a flourishing industry. Now, what I mean by flourishing industry is that the industry size as a whole is increasing. Also, any particular industry is going to have n number of companies, and so it is totally upon the skill of the investor to identify fundamentally strong companies that are capturing the growing market size. Hi everyone, my name is Harsh Srivastav, and in today's video, we'll be looking at 3 industries that are expected to witness a tremendous growth in their market size. Simultaneously, I will also share one fundamentally strong stock in each of these industries. Also, we keep coming up with these kind of well-curated personal finance videos, and so I would highly recommend you to subscribe to the channel so you don't miss out on any of our future videos. The first industry that we are going to look into is the renewable energy industry. Renewable energy is simply energy that is created using natural resources which replenish themselves faster than they are consumed. According to an article published by The Wire, the share of renewable energy in the electricity mix of India stood at just 23% in 2020. The remaining 77% of the electricity came from fossil fuels. The problem with fossil fuels is that they are limited and they create toxic emissions which are responsible for global warming. The only solution for this is a paradigm shift towards renewable energy. This will not only stop us from over-dependence on fossil fuels but also help us in addressing climate crisis. The good news is that the government is also on the same page. In the G20 summit held on 15th November 2022, Prime Minister Narendra Modi said that by 2030, 50% of India's electricity will be generated through renewable sources. The Union Minister of Power, Mr. R.K. Singh, has also said that investment in India in the renewable energy sector could total around $25 billion in 2023 alone. Now, it is a big question that which energy resource will contribute most towards this goal. In the quest to find the answer to this question, I started researching and I landed upon a report by McKinsey. It projected the share of renewables in the power mix globally. On close observation, one could see that from 2020 to 2050, the major growth can be seen in solar energy and onshore wind. The combined share of solar and onshore wind is expected to be around 70% by the year 2050. Among the two, solar is expected to contribute 43% to the power mix across the globe. Now, as far as India is concerned, we are very rich in terms of the solar radiation that we receive throughout the year. Also, the cost of manufacturing solar panels have reduced to such an extent that solar energy has become the cheapest form of electricity. With the rising FDI inflows towards renewable energy sector, and with the government allocating 19,500 crore rupees towards production-linked incentive schemes in order to boost the manufacturing of high-efficiency solar modules, companies which are focused in the solar space are expected to do really well in the coming decade. One company that I want to bring to your attention is Borosil Renewables. Borosil Renewables is the first and only solar glass manufacturer in India. They have a manufacturing plant in Bharuch, Gujarat, where the production capacity is 450 tons per day. Other than the domestic production, company has also recently acquired Interfloat Group, which is one of the largest solar glass manufacturers in Europe. The addition of Interfloat Group brings an additional production capacity of 300 tons per day. The company sees a huge potential in the solar industry, and therefore it aspires to reach a production capacity of 2100 tons per day by 2024. Borosil is also renowned for development of world's first fully tempered 2mm solar glass. The solar glass comes with various applications including greenhouse, utility scale solar PVs, solar rooftops, solar thermal projects, building integrated photovoltaics, and more. If we look at the financials of the company, Borosil Renewables grew its revenue from 271 crores in financial year 2020 to 644 crores in financial year 2022, making the compounded sales growth in last 3 years to be an impressive 44%. Also, Borosil exports its solar glass to mainly US, Turkey and Europe, and the exports form 23% of the company's revenue at present. If we look at the profitability, the company went from break-even in FY20 to a profit of 166 crores in FY22, making the compounded profit growth in last 3 years to be 53%. The investors in the company have benefited a lot in the past 3 years, as the stock price CAGR in the last 3 years has been 118%. If one looks at the cash flow of the company, it is very evident that company has been raising funds in the last 2 years, either through issue of new shares or through borrowing long-term debt. These funds are being used by the company to invest in property, plant and equipment so that the company can increase the production capacity of the company in line with the increasing demand in the solar industry. In 2022 alone, the company has invested 373 crores towards fixed assets. With solar industry having a bright future, Borosil Renewables is definitely expected to play a pivotal role in the penetration of solar portfolio acceptance in India. The second industry that we are going to look into is the education and training industry. The number one reason why education and training industry is ripe for opportunities and growth is the large chunk of population in India falling in the age bracket of 5 to 24 years. Without any exaggeration, a whopping 580 million people fall in this age bracket. The second reason is that India has a large English-speaking population, which brings in ease in the delivery of educational products. One more thing that I want to point out is that FDI allowed in the education sector is to the tune of 100%. These favorable policies and the demographics of Indian population have been the reason why Indian edtech startups received $3.94 billion in total investment in just FY22 alone. As per India Brand Equity Foundation, the online education market in India is expected to grow at a CAGR of 20%, and the total market size of education industry in India is expected to go from $117 billion in FY20 to $225 billion in FY25. Now, with respect to the training industry, it fulfills the gap between the old school curriculums and the new age jobs that exist in the market. The training industry not only caters to undergraduates and postgraduates but also working professionals through means of corporate trainings. These are mostly aimed at providing relevant skills to individuals so that they are ready to get placed in the job market. While the online training industry is really fragmented and competitive with the presence of more than 500 companies working in this area, the majority market share is still captured by just 9 to 10 players. One player that I see is making good progress in this industry is NIIT Limited. NIIT Limited is involved in providing training and development solutions to enterprises as well as individuals across 30 plus countries. It operates two businesses for the same. The first one being NIIT's Corporate Learning Group, which offers managed training services to market-leading companies in North America, Europe, Asia, and Oceania. Under the managed training services, NIIT designs and develops the content for the curriculum and delivers the training to company employees, ensuring that the companies receive the highest return on their training budget. The company also provides consulting and advisory services to its existing clients in order to develop effective talent sourcing strategies and transform the operational model of companies. The second business operated by NIIT is the Skills and Careers business. It offers learning and development programs to individuals in futuristic domains. The domains include data science, social media marketing, fintech, game development, full stack software development, machine learning, cloud security, etc. Along with these programs, NIIT also offers placement services so that individuals can start applying the acquired skills in their respective industries. Till date, NIIT has trained more than 3.8 crore people and has provided its services to more than 800 corporates. No wonder it is among the top 20 training outsourcing companies globally for the past 15 consecutive years. NIIT has a robust digital platform to support online and remote learning to corporate employees and individual learners. If we jump on to the financials of the company, NIIT Limited grew its revenue from 889 crores in financial year 2020 to 1377 crores in financial year 2022, making the compounded sales growth in the last 3 years to be 17%. Out of the total revenue of the company, 82% comes from corporate learning group and 18% comes from the skills and careers group. One amazing fact about NIIT is that in the last 2 years, the company has maintained a record of 100% renewables for its managed training services. Coming to the profitability, the company went from a profit of 64 crores in the financial year 2018 to a profit of 230 crores in financial year 2022, making the compounded profit growth in the last 5 years to be 39%. In the last 3 years, the stock price CAGR has been 60%, which has really benefited the shareholders in growing their wealth. Also, NIIT used to have a debt of around 150 crores till 2019. Post-pandemic, company started getting rid of debt, and now NIIT has zero long-term borrowings and is almost debt-free. If one looks at the shareholding pattern of the company, one can see that foreign institutional investors hold 20.5% of the company and domestic institutional investors hold 12.2% of the company. The flow of smart money in the company clearly indicates that NIIT has a strong performance outlook in the future, and one can definitely keep this stock in their evaluation and research bucket list. The third industry that we are going to look into is the healthcare industry. The healthcare industry is basically an aggregation of all types of businesses that are involved in either providing medical services and insurance or manufacturing of medical equipment and drugs. The industry as a whole has witnessed a strong CAGR of 15% between 2016 to 2022. And with rising income, better health awareness and increasing access to health insurance, this growth is expected to continue in the future as well. Another reason for this spectacular growth is the availability of a large pool of trained medical professionals in the country. In 2022, India's public expenditure on healthcare stood at 2.1% of GDP, and the government aims to increase the public health spending to 2.5% of GDP by 2025. To support the country's healthcare infrastructure, the government also plans to introduce a credit incentive program worth $6.8 billion. Now, within the healthcare industry itself, hospitals form the major share of the total market size. For leading hospitals in India, the bed capacity is expected to increase by 30% by the financial year 2025. Also, to capture the growing market size, hospital chains have started to foray into retail pharmacies, diagnostics, as well as specialty clinic chains. One fast-growing hospital chain that I want to talk about is Narayana Health. Narayana Health was founded by Dr. Devi Prasad Shetty after he witnessed that people didn't come back to hospitals when costly heart operations were recommended to patients for remedial purposes. He believed that quality and low cost are not mutually exclusive, and so he built Narayana Health with the drive to provide globally benchmarked quality healthcare services at affordable prices. Currently, the company operates 21 hospitals in India, 1 international hospital in Cayman Islands, 6 heart centers, and 19 primary care facilities across India. In total, the number of operational beds available in the group is 5,859 beds. The main specialities that Narayana Health holds includes cardiology, cardiac surgery, cancer care, neurology, neurosurgery, orthopedics, nephrology, urology, and gastroenterology. The hospital chain boasts of an employee count of 16,000 people and treats more than 2.5 million people every year. Coming to the financials of Narayana Health, the group's revenue increased from 3,128 crores in financial year 2020 to 3,701 crores in financial year 2022, making the compounded sales growth in last 3 years to be just 9%. But if we look at the profitability of the company, then we can see that the profits increased from 119 crores in FY20 to 342 crores in FY22, making the compounded profit growth in last 3 years to be an impressive 81%. The group's debt to equity is 0.48, which is quite healthy when it comes to asset-heavy businesses such as hospital chains. If we look at the shareholding pattern, the promoter holding is high to the tune of 63.85%, which is a very good sign. Other than the promoters, institutional investors hold 25% of the company's shares. The flow of smart money in Narayana Health indicates that analysts believe that there can be a strong growth in the future prospects of the hospital chain. Hope you found this video helpful in giving you a starting point to further research on the fast-growing industries and evaluate more such stocks which have a great potential. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.